Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we're analyzing an important development that many Iraqi dinar followers are closely watching: the connection between government formation in Iraq and the possibility of changes to the exchange rate. The core idea circulating right now is that progress on forming a government is being viewed as a key factor, what some are calling the lynchpin, for any potential rate adjustment. There is also speculation that the government formation process may resume more decisively as regional conflict winds down or once war conditions have fully ended. Let's break this down carefully and realistically. First, government formation in Iraq has historically played a central role in economic stability. After elections or major political disruptions, the time it takes to form a functioning government can directly influence investor confidence, fiscal policy execution, and coordination between institutions such as the Council of Ministers, Parliament, and the Central Bank of Iraq. Without a stable executive authority, it becomes significantly more difficult to implement large-scale economic reforms or currency policy adjustments. For those following the Iraqi dinar, it's important to understand that exchange rate policy in Iraq is not simply a political announcement. The dinar's official exchange rate is primarily managed by the Central Bank of Iraq, which operates with a degree of independence. But it does not function in a vacuum. Major policy changes often require coordination with the Ministry of Finance, alignment with budget frameworks, and broader macroeconomic planning. All of this becomes much more complex in the absence of a fully seated and operational government. Now let's examine the idea that government formation is the key trigger for a potential rate change. From a structural standpoint, that argument has some logical basis. A newly formed government typically sets economic priorities, finalizes budgets, addresses public sector salary obligations, and negotiates international agreements. If there were to be any structural shift in exchange rate policy, whether appreciation, adjustment, or reform, it would require political cover, fiscal planning, and public communication strategy. Those elements are more feasible under a stable administration than during political uncertainty. However, it is equally important to remain balanced. Government formation alone does not automatically lead to a currency revaluation. Exchange rate policy is influenced by foreign currency reserves, oil revenue flows, inflation trends, trade balances, and the broader stability of the financial system. Iraq's economy remains heavily dependent on oil exports, and oil revenue directly affects the supply of US dollars entering the country. As long as Iraq's fiscal position is closely tied to energy markets, any exchange rate adjustment would need to consider oil price, sustainability, and budgetary commitments. The reference to the war ending or winding down adds another layer to this discussion. Regional instability tends to raise risk premiums in emerging markets. When there is war or heightened geopolitical tension, foreign investors typically become more cautious. Capital inflows slow down, and governments prioritize security spending over reform initiatives. If conflict conditions ease, that can open the door for resumed economic planning and structural reform efforts. In Iraq's case, improved regional stability could positively impact investor confidence, cross-border trade and reconstruction efforts. A reduction in geopolitical risk can also stabilize oil markets, which in turn supports predictable revenue streams for Baghdad. A more predictable revenue environment strengthens the central bank's ability to manage reserves and maintain exchange rate stability. Short term. What does this mean for Iraqi dinar followers? In the immediate horizon, the most realistic expectation is continued stability management rather than sudden, dramatic currency shifts. The central bank has historically used tools such as currency auctions, reserve management, and regulatory measures to maintain exchange rate stability against the US dollar. Any abrupt or unplanned rate change would risk inflationary pressure, market confusion, and capital flight, outcomes policymakers typically try to avoid. If government formation resumes as regional tensions ease, we could see incremental progress in financial reform areas. These might include banking sector modernization, anti-money laundering compliance, digital payment expansion, and improved coordination between fiscal and monetary authorities. Such reforms strengthen the underlying foundation of the currency over time rather than through overnight changes. In the medium term, once a government is fully formed and functioning effectively, several economic signals will become clearer. Budget implementation will reveal fiscal discipline levels. Infrastructure spending plans may indicate growth priorities. International partnerships and agreements could reflect Iraq's reintegration into broader financial systems. All of these factors contribute to currency credibility. Long-term, the real strength of the Iraqi dinar depends less on a single political event and more on structural transformation. Diversifying away from oil dependency, strengthening private sector growth, improving tax collection systems, and expanding non-oil exports are crucial components. The central bank's foreign reserve levels, which have at times been relatively strong compared to regional peers, provide a buffer, but reserves alone do not justify significant exchange rate appreciation without corresponding productivity growth and export diversification. It is also worth noting that exchange rate adjustments are often calibrated to maintain competitiveness. If Iraq were to significantly strengthen its currency without parallel economic expansion, it could make non-oil exports less competitive and increase import demand, potentially widening trade imbalances. Policymakers must weigh these factors carefully. For dinar watchers, patience and realism are essential. Political stability is indeed an important ingredient in economic reform, but it is one piece of a broader macroeconomic puzzle. The narrative that government formation is directly and immediately tied to a rate change oversimplifies the complexity of monetary policy decisions. That does not mean reform is impossible. It simply means that meaningful reform tends to follow structured planning, institutional coordination, and measurable economic progress. As the situation evolves, key indicators to monitor include official statements from the Central Bank of Iraq, parliamentary approval of budgets, reserve data releases, inflation reports, and oil export revenue figures. Watching these metrics provides a clearer picture than relying solely on political headlines. If regional conflict does fully subside and Iraq enters a more stable phase, that would certainly improve the environment for economic planning. A stable security backdrop can reduce currency volatility, support foreign direct investment, and allow long-term infrastructure and development projects to move forward. Over time, those factors strengthen economic fundamentals, which in turn support currency credibility. In conclusion, the idea that government formation is central to any potential rate change carries some structural logic, but it should not be interpreted as an automatic trigger. Exchange rate decisions are complex, data-driven, and coordinated between institutions. While the end of conflict and renewed political stability could create favorable conditions for reform, meaningful currency developments will depend on sustained economic progress, disciplined fiscal policy, and continued reserve strength. For those following the Iraqi dinar, the responsible approach is to focus on fundamentals rather than speculation. Political milestones are important, but economic transformation takes time and coordination. Thank you for watching. If you value responsible, factual, and balanced updates on the Iraqi dinar and Iraq's economy, make sure to subscribe to the channel and like the video. And as always, this content is provided for informational purposes only and should not be considered financial advice.